The firms you're going to hear about in this presentation are some of the smallest publicly traded companies in the stock market. So there are two important things you should know right up front. One, stocks that trade for less than $1 a share come with some special risks. And two, not all companies of this size pan out. To be sure, many penny stocks are penny stocks for a reason. That said, we believe your odds of success in this powerful universe have just been greatly increased. Odds of finding companies like Abraxas Petroleum, which soared from 65 cents all the way to $5.87, an 803% gain in a little more than 2 years. And Samson Oil and Gas, a tiny company with attractive oil properties in North Dakota, New Mexico, Wyoming, and Texas. It skyrocketed from 28 cents a share to $4 in less than a year for an eye-popping 1,328% gain. You could have made a $6,000 investment and in about 14 months walked away with as much as $80,000 in cash. And companies like Miller Energy Resources, another tiny firm with oil and gas wells in Appalachia, it shot up from 15 cents a share to $8.02 on the heels of rising oil prices. That's a 5,246% return. Just imagine, if you had plopped down $10,000 on Miller Energy Resources and forgotten about it, you could have woken up 2 years later with an extra $524,600. There are very few opportunities anywhere that hand you even the possibility of seeing gains like these. The best part is, you don't have to risk a lot to make a lot. Hundreds of regular people have made very handsome gains in this special piece of the market just by putting $1,000 to $5,000 into one or two of these little stocks. That's all it takes. Acorn Energy, for example, was selling for just $1.35 a share in late 2008. By April of this year, it had gone all the way to $12.09. A $1,000 investment would have risen to $8,950 less commissions. There have been a lot of other micro-energy stocks that made people handsome profits, including Coastal Energy, which jumped from $3.25 a share in 2010 to $20.37 today. Petrobras is up 449% in 2 years. Basic Energy Services, Cheniere Energy. Here's my point. Even if you missed 9 out of 10 of these, you still would have ended up with a sizable pile of cash. With Kodiak Oil and Gas, a $5,000 investment in 2009, when it was selling for 19 cents a share, would be worth $248,157 today. Stone Energy and Legacy Oil and Gas could have given you similar life-enhancing returns on your money. Of course, you know the other side to this. These are highly volatile stocks. They bounce up and down like a yo-yo. For every one big winner, there can be 3 or 4 losers. But experienced energy players who know what they're doing can make incredible money on stocks like these. Like hedge fund traders, microcap energy players don't need a very high percentage of winners to outperform the market by a sizable amount. With strict money management guidelines, you can quickly close out a loser and let your triple-digit winners run. Again, it just takes one to hit it big. And now, for the first time, you'll know exactly which ones are most likely to soar. I'm Alex Williams, the Associate Publisher here at MoneyMap Press. I work closely with Dr. Kent Moores, who edits our Energy Advantage and Energy Inner Circle research services. As most of our readers know, Kent is one of the world's leading authorities on energy and energy investing. He's a professor and scholar-in-residence at the Institute for Energy and the Environment at Duquesne University and a consultant to 6 of the world's top 10 oil producers. He's also been an advisor to 16 world governments, including the US, Russia, and China, and he advises numerous corporations too, including the Bank of England, AT&T, and the Russian Central Bank. Kent knows the most important people in the industry, the world's biggest buyers and sellers of energy, and the policymakers who make the rules. But what many people don't know is that over the past several years, Kent has been compiling a detailed dossier of microenergy stocks that he doesn't share with anyone, not with subscribers in his newsletters, not even with members of his elite energy research service. The reason why is obvious. These are very thinly traded stocks that can frequently take off like a rocket overnight, simply on rumors. They are also not suitable for the portfolios of most ordinary market players. Many of them double, sometimes even triple your money in a week. But some go nowhere, and some even lose money. We've known about Kent's dossier of microenergy shares for years. You see, at least once a week, Kent would call to tell me about another opportunity he discovered. He'd tell me about a brand new company with cutting-edge drill bits, for example, bits that could significantly improve production on every rig in North America. Or he'd tell me about a company's lucrative new oil find, or its ability to reduce costs at the wellhead, or about the size of the totally untapped market it's about to exploit. And each time, I'd ask, when can we get the alert out to readers? Well, he'd invariably reply, here's the thing. These companies are almost all tiny, usually trading at less than $1 a share, and their market caps are minuscule, often less than 100 million. That means they're too small to recommend to Kent's entire readership. They're just not liquid enough, and it's a shame. The potential gains of these microenergy shares are phenomenal, 100%, 200%, sometimes even 400% or more. I just couldn't stand by and let these opportunities for huge gains go to waste. They're too good. So 13 months ago, I talked Kent into doing a VIP microenergy seminar for a small, elite group of subscribers to his research services. We decided to hold the seminar on a cruise ship in the Pacific Ocean. The cost was $5,000, not counting the cost of the cruise. The ground rules were simple. Kent would teach 30 people how to get into microenergy stocks, but only if they promised not to share the recommendations with anyone else. It was hush-hush. Nothing was recorded. Kent prepared a model portfolio of recommendations during the seminar and then agreed to follow up with this tiny group each week. His emails would include all the buy and sell recommendations. This was important. You see, these are not the kind of stock opportunities you can buy and forget about. You have to follow them closely and sell at just the right moment. Now, 13 months later, I couldn't be more thrilled with the results. In the first 3 months, 5 stocks Kent recommended went down a small amount before being stopped out. His strict money management rules kept the losses to a minimum. Those same rules, however, allowed the winners to run wild. 5 of his recommendations ran up by triple digits. The first one, a 178% win, took just 6 days. It started on September 30th, 2011, when Kent sent his first follow-up email to the seminar attendees. In that email, he recommended a microcap stock called Ener1, when it was selling for just 14 cents a share. You could have picked up 3,571 shares for just $500. It would have been a good move, too. This tiny development company pioneered lithium battery and rechargeable battery technology and applications in both the U.S. and South Korea. It had recently been involved in a mega management battle that resulted in several lawsuits and a decline of 88% in share value since August 8, 2011. But Kent followed this company closely and knew that it had the potential to skyrocket on any whiff of good news. And on September 30th, we got some. The stock shot up 33% in a day following the announcement that CEO and board chair Charles Gossenheimer had been fired and replaced by Chris Kauger, the company's former president and previous vice president for advanced micro devices. Kauger was and is a good choice to lead the company back into production, and Kent felt that there would be a short-term rise on a stock with relatively high daily trading volume, in excess of 2 million shares. He was right on the money. A week later, the stock had shot up to 39 cents a share, and Kent closed the position for a 178% gain. Again, it took just 6 days. And get this, 5 out of the 6 stocks he recommended in that same email doubled, and in a few cases nearly tripled. Barian Exploration was one of them. It's an ultra-micro with a market cap of just $2.5 million. The company takes minority positions in projects and has operating oil and gas well interests in Texas and Louisiana, along with some development prospects in the Eagle Ford deep shale gas play in southern Texas. The cruise seminar participants were able to pick up shares for 8 cents apiece. When the stock shot up to 15 cents, Kent recommended selling half of the position for an 87% gain in 11 days. And then, when the rest of the shares hit 19 cents, he recommended selling the balance for a 132% gain in 25 days. Remember, these are stocks, not options. High Plains Gas is also an ultra-micro, worth a total of $12 million. It has interests in more than 1,600 North and South Fairway wells, 7 Powder River Basin wells, and 57 other wells, primarily in Wyoming. The company popped 66% on the day Kent recommended it, to 10 cents, following its announcement that it had brought its Fitch fields back into production. In short, subscribers bought the shares for a dime and sold half of them in 52 days at a quarter a share. The total gain was 150%. Same thing with Ram Energy Resources. This one's a microcap oil company with interests in the Electra, Burke-Burnett fields located in Wichita and Wilbraham County, Texas, as well as other fields in Oklahoma and Louisiana. When Kent recommended it, the stock was selling for 76 cents a share. When it hit $2.01 a few days before Christmas, he recommended to the VIP seminar group to sell half their shares for a 164.5% gain in 83 days. The size and the consistency of the gains have been flat out amazing, and we'll look at a few more of them in a minute. I'll also show you why today is a very important day for you and for everyone else who received access to this presentation. You have an opportunity to do something special today and extremely powerful. But first, let's look ahead and take a peek at the micro energy shares Kent's tracking now. The first firm topping his list is an exploration and production company. It specializes in unconventional shale oil, and it's poised for a major swing to the upside. That's because it's what's known as a resource-rich operator. It has significant reserves spread out over several different basins, the Bakken and Spanish Three Forks in North Dakota, the DJ Formation in Wyoming, the highly promising and much discussed Niobrara Basin, and the Haynesville and Cotton Valley in Texas. Having holdings with known resources in diversified basins gives the company a better play on market conditions and a greater ability to optimize production and market price. With NYMEX West Texas Intermediate benchmark crude north of $80 a barrel, available shale oil is incredibly desirable, and that puts this small company right in the center of the action and ready for a sudden pop. Now, here's the amazing part of this story. Today, shares of this company can be bought for just 75 cents each. That's 1,000 shares for just $750. So how high could it go? Back in 2008, when oil prices really skyrocketed, this stock was selling for a high of $84 a share. That means if it runs back up to just a quarter of that, to $21, an initial $750 stake will be worth $21,000. That's the sort of risk-reward ratio that's possible with these micro energy shares. Here's another one. This is another ultra-micro with a market cap of just $29 million. The company provides narrow, midstream services across several product lines, developing and managing liquid storage facilities, for example. While midstreams have been a hot topic with many analysts, they had run up against a wall in the first part of 2012. Most of them, especially the master limited partnerships generating a lot of income, have emphasized natural gas gathering, transit, and storage. That meant the collapse in natural gas prices in early 2012, a result of a very mild winter and excess supply, put pressure on the entire sector. Those companies providing midstream services to crude oil and oil products had fared a bit better given the contrasting rise in prices. But now natural gas is rebounding, and these microcap midstream companies are poised to take off like a rocket. The company, due to its size, is highly volatile. It spiked 27.5% in a single day off of a better-than-expected earnings report. But a wild ride can still be an extraordinarily successful one, and right now you can pick up these shares for just 64 cents. Here's another great one. This play involves the fourth largest shallow water drilling company in the world. It has the largest jackup rig fleet in the U.S. Gulf of Mexico, with annual revenues of $650 million. Since Kent began recommending this micro-energy stock, the oil field service segment in general, and offshore provisions in particular, have begun moving up smartly, and this company has moved right along with it. The stock is up 17% since July, and it's climbing fast. Its performance is better than offshore shares as a group, but it's not too late to buy it. Not even close. You can get in for just $5 a share right now, and Kent believes it can run all the way up to $38. Odds are, it will. How can Kent be so sure? In the highly volatile, long-shot universe of micro-energy penny stocks, how has he been so spectacularly successful? There's a big difference between established cash cows like Halliburton and Valero and the tiny hopefuls Kent tracks in his secret dossier. But his success is not an accident. The truth is, when it comes to the micro-energy space, you've got to know where real potential cash flow is hiding, and that's where Kent's background really pays off. You see, you have to know a number of things large-cap analysts don't fully understand, only because they don't have to fully understand them, not when they're covering companies with billions in diversified revenue. For one thing, the difference between success and failure for companies this small is often just a single deal, a single agreement, or a single technological breakthrough. In almost every case, their ability to get that one deal done or that one contract signed is impacted by much more than supply and demand factors. You have to know the history behind these companies and the history of the executives who formed them. You have to know where the company stands in terms of its life cycle. You have to know the politics of the states in which each company operates. And you have to know, especially with companies introducing new technologies, whether someone like Schlumberger is standing in their way. Kent knows all of this. He's been in the industry at every level for more than 31 years now. He understands what it takes to get tiny energy companies off the ground. Most importantly, he understands the money. Small company financing is a delicate dance. If a young oil producer needs cash, for example, what's the best way for them to get it? Well, Kent would say, it depends. They have a number of choices: secondary offerings, warrants, preferreds, interest-bearing paper, a new line of credit, a blend of two or more of these options, or, Kent's favorite, a joint venture, which brings a third outside party to the game. But again, it all depends on the situation. And whatever the companies decide, Kent will know if it's a good deal, or a bad one. Now, obviously, for legal reasons, he can't talk about any company with which he has a consultant relationship. But because he knows the process, and most of the key players in the various states, Kent has a built-in understanding of what's real and what's not. He can instantly see when a company has a real breakthrough on the horizon, and how likely a given roadblock can be overcome. He knows who might benefit from the deal and which big players might help or hinder the process. In short, what Kent brings to the table is a unique understanding of how deals get done. That explains his track record. In 2011, all of the closed positions in this microenergy portfolio, winners and losers, averaged a 48.7% gain overall. And here's what's truly amazing. Kent's track record in 2012 has been even more spectacular than it was in 2011, with his biggest winner over an extraordinary 400%. Some of his recommendations bagged gains as high as 421% and 305% on one position, 239.93% and 208.58% on another, 209.21% on a third, 100% on a fourth, and 97.8% on another. So, here's the reason I'm reaching out to you today. Word of our VIP cruise seminar has gotten out, and I've been getting a lot of pressure from subscribers to let more people into Kent's research service, anyone who wants access. But I simply can't do that. As I said earlier, these are penny stocks, and while we get many triple-digit winners, some end up with losses, albeit small ones. Also, they are very thinly traded. If Kent wrote about these stocks in his Energy Advantage newsletter, or even in his Energy Inner Circle trading service, it would be difficult for the market to handle the excess volume. After more than a year of thinking about it, however, we've decided to compromise. Kent has agreed to create a brand new elite research service for these microenergy stocks, but he's going to limit it to just 400 subscribers. Those who received access to this presentation today can lock in one of those slots right now. I'll show you how to do that in a minute, but first, let me be totally upfront. The price for Kent's service is not low. The 30 members who attended Kent's private cruise seminar paid $5,000 to be there, not including the cost of the trip. I have, however, arranged to bring the cost down significantly for the 400 people who become charter members today, as you'll see. This will be a small group, but we believe it's the best way to balance the desire for Kent's microcap recommendations with his ability to deliver an effective service. So here's everything your charter membership includes. The moment you join, The first thing you'll get is Kent's brand new special report with all of his current micro-energy recommendations. It's called Micro Energy Wealth. This no-nonsense, plain English guide reveals why these small energy companies offer realistic opportunities to multiply your wealth many times over. Here are a few of the firms it covers in detail. The Microcap Exploration and Production Company that you can get into for 75 cents a share, the one that sold for more than $80 a share just 3 years ago. Read Kent's analysis immediately and get ready, because he could pull the trigger and recommend these shares at any moment. This is one of the highest rated stocks on his watch list, the small group of companies that Kent recommends moving in and out of quickly, depending on a number of factors. The report also covers the Ultra Micro Midstream Energy Company that you can buy for 64 cents a share right now. Again, this is a stock in which subscribers have seen gains on a number of times and will likely continue to do so over the next 12 months. You'll also learn all about the Shallow Water Drilling Company that is currently selling for $5 a share and could go back to $38, where it was just a few years ago. And you'll also get the details on the liquefied natural gas player that's up 75% in the past 18 months and is probably headed much, much higher. Then, the serious money-making benefits begin. The micro-energy trader is definitely a swing for the bleachers type of service. You're going to get opportunities to take small amounts of money, say $1,000 to $5,000, and turn them into $20,000 or $50,000. Occasionally, we'll only get to second or third base, and sometimes we'll get thrown out at first. But we're going for the home runs, like Kodiak Oil and Gas, an extraordinary opportunity that turned every $5,000 into $244,736 in just 3 years. In addition to the current model portfolio, you get ongoing new recommendations for the next 12 months. Kent typically offers one trade recommendation a week, sometimes less, sometimes more, via email. His recommendations will be picked from the entire landscape of the microenergy universe, wherever there's a potential fortune to be made. Unlike many research services, Kent will tell you precisely when you'll have a chance to lock in gains in all of his recommendations. This is usually a multi-stage process. When he recommends an exit on a successful play, he'll normally suggest closing it out in increments. For example, if Kent recommended a microenergy stock that has soared over the past few months in his model portfolio, he'll suggest you sell perhaps a quarter of the position 1 week, wait a week, and then sell another quarter. I can't tell you how many times I've seen Kent double the gains by doing things this way. Just when you think the move is over, another round of gains can pile up. As a result, Kent will send you follow-up emails, as many as necessary, with specific recommendations on when to get in, when to get out, and when to hang tight. Kent will encourage you to cut a loss early. He places trailing stops on all of his recommendations. This way you'll always know exactly how much money you have at risk, and you'll also know exactly when to get out, if necessary. The flip side of this, however, is to not get out too soon if you're riding a big winner. This is how Kent's able to record such big gains, like the 11 triple-digit winners seminar attendees have had a chance to lock in over the past year. Finally, you get ongoing answers to your questions. With this premium research service, you can call or email our member services team at any time. You can even pose your questions directly to Kent. He can't provide personalized investment advice, of course, but he can send the answers to your general questions to our small group of charter members. That means you'll also benefit from the questions of others. Now, there's one thing you should know. Kent's track record is phenomenal, but there's no guarantee that every one of his recommendations will soar. Again, some may even lose a little bit of money. But perhaps the best thing about Kent's new research service is that you can start small. Even a $500 investment, as you've seen, can pay off big. As you gain confidence that the trade recommendations stand to produce significant gains, you can begin to slowly make bigger and bigger investments if you choose to and build up your account. Or you can keep making smaller investments. You can even choose to not play at all, whatever you're comfortable with. How much you put in is always up to you. And we're making it as easy as possible to start. As I said earlier, these micro-energy stocks are very thinly traded. We simply can't have too many subscribers rushing to get in or out at once. So we have to limit this service to 400 subscribers or we can't do it at all. And once these 400 slots are taken, that's it. You can get on the waiting list, but that means you'll have to wait until someone leaves before you can get in. You'll probably pay more too. You see, joining today not only gives you immediate access to Kent's micro energy recommendations, it also locks in the highly discounted charter membership rate. Remember, those who got access to these opportunities on the private cruise paid $5,000, not including the cost of the trip. But when you join today as a charter member using the button below, you'll get a very special deal. You'll get more than half off and pay just $24.95 for a full year of Kent's top micro energy picks. That's a spectacular deal, given the exclusivity of this group and considering you could easily recoup the total cost with just one play. And the deal won't last long. There's a chance all 400 slots will be taken by tomorrow. And the rate could move back up to $5,000 a year, even for people on the waiting list. Now, I know this research service is not inexpensive, but we do want to make it accessible to as many people as possible. So here's what Kent agreed to do. This is an exclusive, high-end research service geared toward people who want to take advantage of the huge gains potential micro-energy stocks offer and for those who understand the risks. But Kent decided to create a unique guarantee that, to me, is a no-brainer. Click on the button below to secure one of the 400 charter memberships today just to make sure you get in, and you'll be able to test drive his micro-energy trader for 60 days. You can get in on the opportunities with real money or just paper trade them to see how they do. If you decide it's not for you, just give us a call within 60 days and we'll refund your entire subscription fee, 100% of it, no questions asked. We'll give you your money back even if you don't follow any of Kent's trading recommendations. Again, we realize that the micro-energy trader may strike some people as a bit pricey, but to be brutally honest, this research service is designed solely for people who are interested in making serious gains consistently, like the 178% we saw in just 6 days with NR1, or the 132% gains we made in 20 days on Bearing Exploration. That said, with a 60-day money-back guarantee, you have nothing to lose by locking in one of the 400 charter memberships right now. Sooner the better. Some of the micro-energy shares Kent has recommended to his 30 VIP seminar participants are surging fast. One is already up 421%, another is up 239.9%, and yet another is up 83.5%. And wait until you see all of the other companies he's tracking now. No guarantees, but here's a sampling. An ultra-micro fuel cell company currently selling for $1 with a new high-power zinc air battery. The company has been contracted by the military and police units worldwide. A clean coal company you can get into for just 12 cents a share. 10,000 shares for just $1,200. That could double, even triple overnight. A Canadian ultra-micro selling for just 24 cents a share right now. This one's acquiring new technologies in alternative energy and greenhouse gas reduction developed at the University of British Columbia's Clean Energy Research Center, and it's already up 84% in a month. A small cap that has recently moved up in market cap to $1.3 billion, specializing in portable compressors required for shale gas projects. They get rich selling the picks and shovels to the miners. A rapidly expanding micro coal holding, selling for only $3.50 a share, that sells $1 billion worth of coal through its 8 separate mining operations. That's just to name a few. And based on Kent's success rate, the gains on these micro-energy shares could be substantial and could be made quickly. Some of Kent's biggest winners, such as the 178% gains his VIP subscribers had the opportunity to bank on NR1, came in a matter of a few weeks. And as I write, Kent currently has 13 open positions, and all but 3 are winners, with gains as high as 111%. But remember, to gain access to his recommendations, you have to act now, especially if you want to lock in one of the 400 charter memberships. Just click on the button below to review the details. This is a rare chance to get in on Kent's very best micro-energy picks. Right now, only 30 people have ever seen them, and their special access has paid off in spades. This is your chance to join them. I hope you take it. Based on the high demand for this service, it may also be your last chance.